Awesome. All right. Well, happy Wednesday, everybody. I hope everyone had a great 4th of July. And thank you for hopping on. Like Cindy said, I was one of the first on, which is very unusual. So I'm glad you all are here today. So a lot has been happening. I have a lot to kind of dive into. So as Cindy said, I do have my chat box up. So if you have any questions, please put them there. I understand, not wanting to mute, but at the end, I think that would be a great time. So if you guys have questions that it would be better to, ask verbally, let's plan to do that at the end, and you can unmute yourself because I do love interaction beyond just the chat. So again, thank you guys all for being here. All right, so we're going to go into, always start with rates because it's obviously a very important topic. The rates that have been just crazy. As we've seen, since January to now, there's just been so much volatility, which is what's, I think, so challenging in the market right now is because, where we were one day, we could be somewhere else within 2 days. It's like, and that's what I keep trying to really you let the clients know. And I would recommend for you as well as any clients that you have is, the markets, the rates are changing every single day. So especially when they're comparing rates and they might be shopping lenders, you really need to speak to those lenders on the same day. Because, I had a client that I talked to, on a Thursday, and he talked to somebody else on a Monday, and their rate was different. Well, obviously, because the market shifted a decent amount within those 2 days. So those are some things to keep in mind. This week, yesterday, towards the end of last week, we actually saw the rates improve a little bit. So we had gotten into the 6s over June. We were at 6 1/4, 6 1/8, 6 1/2 on high bow. So we had definitely jumped up there. I would say the market has been in our favor last week and this week until today. We actually just got an alert to lock right before this class. But I would say we're locking in right now, like on conforming loan amounts, we're in the mid 5s. On high balance, we may be a little bit higher. VA loans are actually in the low 5s that we've seen. Also jumbo loans are in the low 5s as well. So we've had a little bit of rate improvement over the past week and a half or so. So again, if somebody's talked to a lender, they just want to make sure that they're staying in touch with them and that they're aware, like I had a client that was making an offer last week. Rates were in the 6s, and by the time we locked her in yesterday, it was 5.625. So that went in their favor, which is always awesome and something we love to see. So if you guys have any questions on interest rates, let me know. Something else that's come up a lot on interest rates is ARMs. I think I mentioned that a little bit on the last market update. ARMs are going to become more popular now with the rate increases that we've seen. And what an ARM obviously means is it's a fixed for a shorter period of time. So, usually see a 5, 7, or a 10-year ARM, which means that it's fixed for 5, 7, or 10 years. It's still amortized over 30 years, but it means the rate is fixed for a shorter period of time during that 30 years. So, we'll see, I think those come more into play. And I'm sure you've already been seeing them in some regards as well. So, there's a lot of products coming out in this. When you see rates move up, a lot of different loan products come out, and I'm going to go over some of that in a little bit. All right, so I wanted to also give you some information on the market in general, meaning like the stock market, not just real estate. So I have a financial planner, and he sends out kind of a market update, and I was reading over that today, and I just found some of it to be very interesting. So I thought I'd share some of it with you. So this is some information he had sent out, these first couple bullets. So stocks and bonds suffered negative returns at the same time over 2 consecutive quarters, which has only happened 4 times in the past 100 years, which is pretty crazy. The S&P 500 down over 20% from the highs that we saw in 2021. Now, I don't know if you guys remember, but in 2020, in the spring, we had a very small recession, and we had what's called a V recovery. And it means that, we dipped and then we came right back up and went back to the same high. And it happened in a very short time frame. What they're anticipating with this market, that the declines that we've seen, that it's going to take longer for us to recover to get back to the highs that we saw. This is from, his perspective, and obviously he's in the market, does a lot of research, so we'll see what happens. But it means that it could take over 2 years is what is anticipated potentially of the recovery that we might see from the stocks in the bond market. The fixed income markets are beginning to price in rate cuts for the second half of the next year. So that was some other interesting information. That was from him, but I also saw it in other articles that I was reading that I'm sure you all know, and this is right here in this bullet, that the Feds raised their rate 0.75%, so 0.75 last month. They're meeting again this month in July, and they're anticipated that they may raise it that same amount again. As you can see, that 0.75% increase was the most aggressive we have seen since 1994, so a long time. And so they're obviously raising the rates. We've talked about this before. They're raising their Fed fund rate to try to push inflation down. And we've also mentioned this before too, that there is anticipation when that occurs that we may end, because of the economy and what they're seeing, is we may be going into a recession. So because of that, some of the fixed income markets and that market is thinking, because of where the economy is and because of the rate increases that they're putting, they're thinking they may end up having to lower their rate the end of next year because of the recession and because of the economy. So we'll see, and what happens, but those are some things to keep in mind and think about. And what my financial planner was saying was keeping in mind that a recovery that takes time would likely provide strong annualized 5-10-year returns above historical averages. So it means that, once we recover from this, and we may see, some higher returns in 5 to 10 years, which is obviously something we all want to hear, because we know we're all getting hit right now, with what the market's going to be. So as we know, whatever goes down comes back up. And you'll see that, and we could even see bigger returns, historically speaking, 5 to 10 years. So, something else I was listening to, and this was something, I try to listen to lots of different things, and I hope you guys are doing the same, because, there's so many different avenues out there. And I think listening to different people, we had a call last week of our chief operating officer kind of giving his input and output, ideas of what he thinks is going to happen with the market. And where interest rates are going and all that kind of stuff. And I was talking to Anna, who I think is on the call, and she was telling me about Brian Buffini in a podcast that he has, and he's been doing the bold predictions for years. So I was listening to his as well. I read articles, listen to all different kinds of things. So I think that's super helpful in our markets. We want to be as educated as possible right now. But as we've all seen, less competition is occurring right now. Now, not all in situations, not all of our listings. There are still some that are seeing competition. But I would say overall, we're seeing less competition and prices, starting to flatten out, meaning we're not seeing the huge increases that, 20% increases that we were seeing last year. There is still an anticipation by almost every economist I listen to that the housing prices are going to continue to increase. Again, not at the rate that we've been seeing. I think the latest was like 1% that we might see next year. So it's going to be a small appreciation amount, but yet it's still an appreciation, because so many people right now are thinking we're going to see a housing crash like 2008. They're going to wait and, buy until they see that. And again, you being educating and being able to have conversations with your clients when they say that and help them understand what what the potential and what the economists predict is going to help you be able to move that client along. And one of those reasons why is because the Bank of America did a survey and said that 2/3 of millennials will buy in the next 2 to 3 years. The millennials is the largest population we have right now. And because of that, and them becoming of households age and now looking to purchase a home, that means our housing market is going to stay strong because the demand is still going to be there. So again, having that information and that education is going to help you educate your clients to be able to help them feel comfortable and safe, and moving forward. The other thing that, I've mentioned this, we had a CMA challenge and all of that kind of stuff, but think about going back, and this is something else that I was hearing on Brian's podcast, is do CMAs for your buyers who purchased prior to 2020. So that's, again, something to think about in generating some business for you, generating contacts and potential leads, and just having touch points with your clients, but let them know what the value of their home is right now. And that could prompt them to looking at selling, looking at purchasing, moving in a different direction. So I think it's something that you want to think about, reaching out to all those clients that you had purchased prior to 2020. Average sales price was down in May from May 22 to 21 by 8.7%, but the median price was still up 8.7 or that's actually not sales price. I'm sorry, that was sales. Oh, average sales, not price, down 8.7 in May. Cash sales were up. Now I usually every month put on here like how many sales we had in cash and VA and all of that. Unfortunately, the data wasn't out yet for May on that. But the one data point that I did see was that cash sales were up to 20%, which we've historically been seeing since I've been doing this market update for 2 years and been tracking it. That's usually around 11 to 14%. So that is a pretty good increase in May. And I think a lot of that had to do with rate increases. And, you know, some people wanting to just pay cash rather than pay, you know, getting the interest rate that was available at that time. So I'm going to keep it track of that and an eye on that and see what happens over the coming months. And if we see that go back down to what, you know, we've been seeing, or if we'll see it go up a little bit. So it's something to keep in mind as well. Anyone have any questions on any of this information or anything they'd like to plug in or mention as well? All right. So lending information. So these are some of the new programs that we're seeing, my goodness, coming out. So I just wanted to mention. So limited doc program and bank statement program. These are geared towards to self-employed borrowers. Limited doc, it means that you can be self-employed for at least a year. And you have to do a P&L, a profit and loss statement from your CPA indicating, you know, what your income is minus expenses, and we can use that income as qualifying. Bank statement program is where you look over 24-month history and look at what their deposits were and average that out to determine what the income is. Now, the thing to keep in mind when you have some of these unique products, the rates are higher. And so this is not going to be for everybody because not everyone's going to be willing to pay for a higher rate. But if they're self-employed and they've written all their income off and they don't have much income for qualifying and they really want to purchase and they know it could be a short-term, you know, loan situation where they could refinance, like once they do have the self-employment, you know, or they have the income qualifying or whatever it may be, these are programs that could allow them to get into a home right now. So if it's anything that you guys are interested in, or you have clients that might be interested, you know, just reach out to me. Also, VA announced recently that veterans can now be charged for pest inspections. So as we all know, they hadn't been able to for a long time. So now you can, the pest inspections can be paid by the buyer. They also are allowed to pay for repairs required. I think this has been happening without the VA technically saying they could, but now they're saying they can. So if there is a repair that's required by the appraisal, the buyer is allowed to pay for it. The veteran is allowed to pay for it if the transaction warrants it, where the seller won't do it, and that's the only way we can move forward. Just know that they are allowed to do that now, according to the VA. Part of our call last week, and it's something that kind of popped up with me, the call that we did with our COO, he mentioned something that really kind of resonated with me is, we've been having such a crazy market for the past, 2-3 years, where we had multiple offers. And if one deal didn't work out, and you wanted it to work out, right? You all did your due diligence to make sure that that lender was, was well qualified and taking care of the borrower. But I'd say not everybody did in that situation. Or if that deal didn't work out, that you could put the house back on the market, or you had so many offers, you could go back to somebody else and get it under contract very quickly. Well, with the current environment, because we just talked about there being less competition, it's really important right now to make sure the deal that you do get on your listing, or you as a buyer's agent, that you make sure that they are working with a trusted lender and that deal is going to go through, because you may not have a backup offer. You may not have as many offers on the deal. So you want to make sure that you're not taking it off the market with, something that may not be able to go, to completion. So I think it's very important right now, make the phone calls to lenders, work with lenders that you trust, hopefully the lenders reaching out to you first, but any questions or anything like that you have on that, let me know. There's also, we now have a one-time construction program. So that's something that we're going to be launching, and I'll be sending out more information on that. So that's exciting. Another program that's coming out is a 40-year interest-only loan. Now, again, that is not the best priced product. I mean, the rates are not going to be phenomenal, Because you think about it, it's a unique product. You're going out 40 years and you're paying interest only on the mortgage. So it's not going to be for everybody. And there could be more, come out, and that could be get more aggressive down the road. But I would say right now, it's not as aggressive as your traditional, conventional and jumbo loans. So, but just something, these are things that, someone might need it in order to make it work. So these are things that we're going to be looking at to see what products do we have that could help this person be able to get into a home. I had a client over the weekend that had only been self-employed for about 18 months. He had written off basically all of his income when he did his return last year. So the only way we were going to be able to get him into a home would be doing the limited doc program. So the good news is there's more products out there that are going to allow more purchasers, but it doesn't mean that the rates are going to be as competitive. So just forewarning you. Anyone have any questions on these new programs, anything about VA, anything like that? I haven't seen one thing in the chat. So somebody's got to like say hi or something, so we at least know that you're there. Because I can't even see any faces today. I'm like, this is like talking to darkness. Hello, thank you. Thanks, Cindy. All right, so VA loans do not allow recasting. So most of you should know, I've mentioned it before, and then we do videos, but recasting means that when you pay a large principal payment on your loan, there are loans that allow you to readjust the principal and interest payment, which is called recasting. So it means that if you have a $200,000 loan, you've paid $50,000 down to it, you pay a small fee of $250, and now you can get that $150,000 loan readjusted and the principal and interest payment recast based on all the parameters stay the same, but it allows you to now get a lower monthly payment. VA and government loans do not do that. Most conventional, all Fannie and Freddie Mac loans do. Most jumbo loans do as well, but VA and FHA doesn't. And the reason why I mention this, because we had a transaction last month, and that's what this kind of section is always about, is I want to kind of give you some things that we encountered. And because VA does not allow to do that, we actually had a client who was VA eligible, but we had to go conventional because they were not selling their current house first. They were going to sell it after we purchased the new home. And they wanted to be able to take the, the equity that they were going to earn from the sale of their home and apply it to the loan and be able to get the loan payment down. So because of that reason, we went with a conventional loan for them versus VA, so that they had the ability to pay that money down, recast it, and not have to refinance. Now, if for some reason, the VA is the only option we can do, the other option is obviously going to be refinancing, and just keeping in mind that VA requires you to have that loan for 210 days before you'd be able to refinance it into a new VA loan. So that would be the other option if they have to stay with VA. This is, again, another transaction. I had a client who unfortunately had a foreclosure, and it was probably 4 years ago. So it was a good amount of time. His credit had recovered a decent amount. So, and he was also putting, I think, 25 or 30% down. Unfortunately, the only way he could purchase was by going FHA because of the foreclosure, because all the other products most of them require 7-year waiting period. So I can't tell you how many listing agents I called, because he would make offers and the listing agent would be like, why are you doing an FHA loan when he's putting so much down? And what I explained to them was that it had nothing, like he was clean everywhere else, like his credit had recovered, his income, he qualified, all that kind of stuff. It was solely based on a credit issue he had in the past, that the waiting period hadn't expired. So something to keep in mind, the FHA, there's going to be situations where it's not all because of the credit score of why someone's going FHA. There's other situations that could warrant that and can still be a very, favorable and strong loan. So just something I wanted to bring up. For sale of home contingencies. So I've had a couple of those recently, as we were just talking about, with less competition. I've had a couple clients that have gotten under contract with a sale of home contingency. Then I also had some that didn't and were planning to sell, prior to closing, but didn't have the for sale of home contingency in the contract. So what we do when we look at that for them is we look at having a backup plan for them of what, okay, if that house doesn't sell in time, I know you're gonna put the house on the market right away, but if it doesn't sell, what do we do to make sure that you guys still can execute and perform on your contract? So we had one last month where this guy actually had his house in Texas, had put it on the market, and unfortunately it was probably 2 weeks into the transaction, maybe 3 weeks, he wasn't selling it. It was a little longer turn time we had, but we had already talked to him at the beginning and said, okay, if this doesn't go, go under contract and doesn't sell in time, what are we going to do? We had already figured out we could put his brother-in-law on the loan, and that we knew it was going to qualify, it was going to work. We were able to lower the down payment because he wasn't going to have as much money, all that. So it came to fruition, unfortunately, that's what we had to do, but we already had it worked out. I had another client recently that was in a similar situation, wasn't going to be able to write a for sale of home contingency into the contract. And we talked about actually having him buy it as an investment property if the worst case scenario happened and he didn't get his current house sold, because then we can use the rent to offset the mortgage payment to help qualify, all that kind of stuff. So we're basically trying to look at all scenarios we can to make sure that we allow that client to move forward and making an offer that can be his most competitive and the home that they find, but also still make them, solid to where we aren't going to have any issues for them. We don't put them in jeopardy once they are under contract. So some things to keep in mind. All right, so let's go back. Now you're asking questions, yay. When did the VA announcements for pest inspection repairs go into effect? It was last month, Sandra. I don't know the exact day, but I think it was like mid to early in June. Do you recommend reverse mortgages? I don't personally do reverse mortgages, but I do have, my grandmother actually right now is in a reverse mortgage. We just had to move her out of her home into assisted living community. So this is something that's somebody just came up to me and was asking me, like, does she own the home? Does she just have to turn it over? She owns the home and there's a payoff associated with the reverse mortgage. So she's trying to sell it and see if she can make enough money to pay that mortgage and net some equity as well. But if she doesn't, then she basically does a deed in lieu and gives the property to the lender who has the reverse mortgage. So that's something that we're actually dealing with right now. Anna said, when you recast, can you keep your same interest rate from the original loan? Yes, that's the whole point of recasting, is you're not refinancing. You're not changing the parameters of the loan. So the term, like the length of the loan, the interest rate, all of that stays the same. All they're doing is readjusting the principal and interest payment with all those parameters based on the new loan amount after you pay it down. Does FHA loans allow recasting? No, VA and FHA does not, no government loans. So Sherry answered the question about same rate and all of that. Okay, so renting versus buying. This is something that's come up quite a bit for me recently, and I'm sure you guys are encountering it as well. So I had a client I was meeting with who's paying $3,000 right now in rent, and it's going up to $3,400 for a condo. And I'm like, oh my gosh, this is crazy. You got to look at buying. So we, got her pre-approved and have her out there looking and trying to get her into a home so that she doesn't have a rent increase of $400 a month. It's crazy. I have another client who was looking at buying, and then they said, oh, we're just going to rent. And so then they went and looked at some rental properties and realized they were old, they were expensive, they weren't going to get what they wanted. So now we've gotten them pre-approved and looking at purchasing a home. So, I did a video recently on that that's going to go out to all pre-approved clients that basically talked about, all rent is inflationary. As we just saw, we saw a $400 increase from a $3,000 payment. For a mortgage, as we all know, the taxes and the insurance are the only thing that are subject to inflation. And, as we just saw this year for Fairfax County, for instance, the tax rate went down like a penny, so not significant, but they didn't raise it because they know the values increased. So they're automatically already going to be paying more in taxes. So, I think they try to keep that moderate to where we're not seeing huge increases on our taxes as well. So there's a lot of benefit from buying, and you're also creating wealth versus creating wealth for, the landlord. So I'm doing a video on that. I think that would be great for you guys to share as well, as it's more and more that I'm seeing people kind of talking about that. In June, we also did a 1031 exchange. I'm sure most of you know that. Cindy has somebody that I think still does classes on that. But we actually had somebody, she sold an investment property. She just bought a new investment property. And one thing she had mentioned to me is she's has to rent it for 2 years. And then she's going to actually move into it as her primary residence after that 2-year period, because that's the waiting period, I guess, for 1031 exchange, that you have to rent it for at least 2 years. So that's, it's a very easy process that we were able to help her buy a new investment property. And then new construction. I've also had several clients, probably, new construction, that are either buying with individual builders, not big, huge communities, but I also have a couple that bought in big communities. And one thing that we've been doing is we locked them in. Let's say we locked them in for 60 days. And so when you lock in for a 60-day period, it gives you the ability to extend it for 60 days. So that's basically a 120-day lock. You can pay for the extension. It can be a little cheaper and a little easier doing it that way than doing like the extended rate lock program. So that's one thing we've been doing for new construction, and it's worked out really well. So if you have anyone in that situation, have them reach out to us, and we can, help talk them through what that would look like for new construction. Anyone else have any questions or anything else they want to ask? Because that is all of my information for the month. I hope you guys found it useful and helpful. And you'll be able to take bits and pieces of this and do some videos or social media or emails, newsletters to your clients to help educate them, so that you can make sure that you're being a resource for them. All right. Well, thank you all.
I have a question, Jolene.
Yes.
But I don't know if I should ask it here or whether I should contact you offline. It's a question about an issue with the Cavers report. It's a general question though, about Cavers report issue.
Yeah, I mean, you asked, is it the one you asked me about last week when we talked?
It's different. It's not into a lot of detail. I just want to know if something does come up on the Cavers report for like a VA loan, does that automatically disqualify you for all loan types or only government loan types?
Government, because they're the only
Okay.
ones that look at it.
Okay.
Mhm.
So
Yeah,
they might be able to
conventional
do
loans
a
don't look at the
conventional.
Cavers.
Okay.
Yeah.
Thank you.
But I mean, their credit history could impact them for the conventional, because most of the time when you have a Cavers, it means that there's outstanding debt, like a default on a federal debt. So if that's on the credit report and impacting, it still could come up in just a different way.
Yeah, it's not showing up on the credit report. It only
Okay.
showed up, and it's a student loan default. It only showed up on the Cavers report for VA loan.
Yeah, but see, with conventional, there's a question you have on the application that says, are you defaulted on any federal debt? So it still could be an issue for conventional as well.
Okay.
It's just not going to
Thank
come
you.
up in the same way. If that makes sense. Like they are going to look at Cavers, but when they fill out an application, that's one of the questions.
Okay.
Unfortunately.
Thanks.
Yeah, you're welcome. All right, thanks everyone. Have a great rest of the day. And I'm doing a class next week as well. I think it's lead generation. So if you haven't signed up for that, be sure to do so. All right, Cindy.
Everybody have a good day.
Cindy, don't I have a
Thanks,
class
Jolene.
next Wednesday? Is it lead generation?
Let me, wait.
Let me look at my calendar.
Yes, I think it is. Thank you, Jolene.